Hello everyone, and welcome to today's deep dive trading breakdown. We're not here to talk about surface level theory, right? We're here to look directly at how the market truly operates. Today we're going to dissect one of the most powerful, yet honestly one of the most misunderstood concepts in trading, the fair value gap. I'm genuinely excited to dive into this topic with you. Have you ever wondered why most fair value gap trades fail so badly? I mean, anyone can open a chart and instantly spot these gaps sitting there. Almost everyone jumps into them, yet most traders still end up taking losses. The reason is actually pretty brutal. They're blindly trading completely worthless setups. They're guessing instead of analyzing with a structured system. All right, our roadmap today is simple. First, we'll clarify what a fair value gap actually is. Next comes the most important section, the 6 golden rules. And finally, we'll go through a real market example to see how professionals execute this strategy with discipline instead of emotion. So let's begin with part 1, understanding the fair value gap and the imbalance behind it. A fair value gap, or FVG for short, is essentially a powerful market imbalance. It happens when price suddenly explodes upward or crashes downward so aggressively that the opposing side has no time to react. To identify it, simply connect the wick of the candle before the explosive move with the wick of the candle after it. That empty area in between is your fair value gap. Simple enough. And here's the fascinating part. The market naturally tends to revisit and fill that imbalance. Understanding this behavior is where the opportunity lies. Now let's move into part 2. The 6 golden rules. This is your professional-grade filter system. Think of it as the ultimate trading checklist. The gap must remain untouched. Candlestick reaction. Support and resistance confluence. Gap priority. Gun box positioning. Break of structure. BOS. Listen carefully. All 6 conditions must be satisfied. Ignore even one rule, and you're basically throwing money out the window. Let's break them down. Rule number 1. The gap must be completely untouched. The entire power of an FVG comes from price violently displacing and leaving one side trapped behind. But imagine price rallies hard and then immediately retraces into the gap before continuing higher. In that moment, the imbalance has already been mitigated. The setup is no longer valid. As soon as you see that happen, eliminate that FVG from your watch list immediately. No hesitation. Now, rule number 2, candlestick reaction. When price revisits the FVG, we must carefully watch how candles behave. A proper setup occurs when the candle body closes safely inside the gap or closes in the direction of the intended trade. Sometimes, the wick may stab deeper into the zone. Don't panic. That's perfectly normal. As long as the candle body remains respected inside the area, the setup can still be valid. But if the candle body fully closes beyond the opposite side of the gap, the setup is instantly invalidated. Now on to rule number 3, the real probability booster. Confluence. Please never trade an FVG floating randomly in the middle of nowhere. For example, look for a bullish FVG perfectly aligned with a support zone, or a bearish FVG matching a resistance level. Think of confluence as reinforced concrete for your trading setup. It dramatically strengthens the probability of success. All right, now let's combine rules 4 and 5 together. What if multiple fair value gaps appear at the same time? Which one should you choose? This is where the gunbox tool comes in. Set it between the 0.5 and 1 levels. For buy setups, focus on the lowest FVG. Draw the gunbox from the low to the high of the impulsive move and only trade gaps located in the lower half of the box. For sell setups, focus on the highest FVG. Draw the box from the high to the low and only consider gaps in the upper half. This tool acts like a signal filter, removing weak and poorly positioned gaps. And now we arrive at rule number 6, your final shield break of structure, or BOS. Before the fair value gap even forms, price must first break a clear previous high or low. Without BOS, the impulsive move has no real significance. Without structure break confirmation, that move could simply be random market noise, and the FVG created by it becomes meaningless. Now let's move into part 3, real market analysis. Let's watch how all 6 rules align together on a live chart. Pay attention to this extremely important sequence of events. 9-6. Boom. Price breaks the previous structural high. We now have BOS confirmation. 9-5. We immediately spot several fair value gaps created from that impulsive move. 9-10. We apply the gun box to filter the valid FVGs. 9-15. This becomes the patience test. We wait for price to retrace into the zone and observe candle confirmation. Finally, at 9:20, once every condition turns green, we confidently execute the trade without hesitation. This is where this system truly shines. We simply run through the checklist mentally. BOS confirmed? Yes. Untouched FVG found? Yes. Most importantly, we remain disciplined enough to use the gun box to eliminate those weak floating gaps above. The only remaining gap sat perfectly in the lower half of the range and aligned beautifully with the previous support zone. Everything lined up perfectly. Once all 6 conditions aligned and the confirmation candle closed safely, the rest became almost mechanical. Take profit? Place it directly at the previous swing high. Stop loss? Place it slightly below the low of the large impulsive candle that created the fair value gap. In this real example, price tapped the confluence zone and exploded upward like a spring, delivering a beautiful winning trade. There's one sentence I want you to truly remember. When you combine all 6 rules together, you create the ultimate fair value gap setup. Listen, this is not gambling, and it's definitely not magic. When you strictly follow this 6-step process, you remove emotion and guesswork entirely from your trading. You begin operating like a true professional. And that leads us to the most important question of all. This system has already proven itself as a powerful money-making framework. But are you actually disciplined enough to sit still and wait for all 6 conditions to align? Can you ignore mediocre setups and patiently wait for perfect confluence? Once you answer that honestly, you'll know exactly where you stand on the line between losing traders and winning traders. Think carefully about that the next time you open your charts. Thank you for joining me in today's deep market breakdown. Stay disciplined, and I'll see you in the next session.